If you're looking for an example of how to file a tax return with self-employed, then look no further. In this video, we're going to do just that so that you can file an accurate self-employed tax return. Welcome to Tax Chit Chat, the place where we talk all things tax all the time. In our last video about how business is taxed, we said that we walked through how a sole proprietor, self-employed, or single member LLC owner would file their taxes on Schedule C. And guess what? This is that video. So the example tax return that we're going to look at is one for a rideshare driver. You know, someone driving for Uber, Lyft, or any one of those platforms. Now, don't worry. It doesn't matter if you operate some other type of business. Everything that we go over in this tax return will work exactly the same if you do something else. You're just potentially going to have more deductible expenses than in this example. In the description of this video is a link to that sample return. We suggest that you download it and even print it out so that you have it handy while we go through this video. And when you're done watching it, you can check out the blog post that has this example in it, which is also linked in the description below. So let's get to it. So if we look up at the top, we will see that the individual that we're filing for is using the filing status of single. The individual is going to list their name, so we have Memphis Reigns. Now, if you don't know who Memphis Reigns is, I suggest you go back and watch the video going in 60 seconds. So basically what happened was when I created the blog post back in 2015, I thought it'd be cool to have Memphis Reigns be a rideshare driver. I'm like, dude, what would that look like with a Shelby GT 500, being a Lyft, vehicle? What can I say? I've got a very active imagination, folks. So he's going to go ahead and list his address, and then what we'll see for 2022, they're going to ask you about digital assets. So this is cryptocurrency, Bitcoin, any type of virtual asset. If you don't, then you'll just simply check no. So as we go through the 1040, we can see right here on line number 8, it says other income, and it's coming from Schedule 1. So we can see on Schedule 1, line 3, it says business income or loss attached Schedule C. So let's go to the Schedule C, which is the meat and potatoes of this whole video. All right, so Schedule C is used by individuals who are trying to report the profit or loss that they have from a business, okay? So it says right there, sole proprietorship. Now, sole proprietors are going to be any business activity that is performed by one owner. These individuals are often referred to as being self-employed because you are your own boss, all right? And if you are the owner of an LLC and there's only one owner of that LLC, so if you have what's called a single member LLC, then you're going to also file Schedule C. And this is because the IRS considers you as what is known as a disregarded entity, meaning that the business activity is not separate from the actual individual. There's a whole host of other business structures that don't file their taxes this way, but single member LLCs and sole proprietors, you are going to file on the Schedule C. Now, one of the other things to note is that some people find out they're self-employed by accident. So some people intentionally go and say, hey, I'm going to go be my own boss. I'm going to go and do my own thing. And then other people don't find out until they actually get ready to file their tax return. Two ways to know that you may potentially be self-employed or have to file a Schedule C on your tax return is one, if you get a Form 1099-K from a payment processor. So like Venmo, Stripe, PayPal, any of those things. If you get one, you might have to file a Schedule C. Or if you get a Form 1099 NEC, which stands for non-employee compensation, it means somebody's paying you and you are not an employee, then you might also be filing a Schedule C. So back to the example, we can see that on the Schedule C, Memphis lists his name, social security number, and he lists the principal business or profession. So what did he do? He was a rideshare driver. So if you do something different, you're a barber, a beautician, you make videos, you're a social media influencer, you're going to put that there. Now, the next thing to know is that you're going to enter a code in B. Now, what this is called is the NAICS code. If you want to look up your NAICS code for your particular activity, then just head over to this website, and I've got it linked in the description of this video, and then you just type in your NAICS, activity, so barber, whatever, and it'll give you the code. If you're a rideshare driver, you're going to use the exact same code as a limo or a taxi driver, and that's 485-300. You're going to list the business address. So if you're operating out of your house, it's your home address. If you are operating from a separate location, you would list that. You're going to put your accounting method. Now, most people are going to put cash because that means that you report your income when you earn it, when you get paid. They're going to ask you, did you materially participate in the operations of this business? Most people are going to say yes because you're actively participating. And if you started or acquired this business in 2022, you're going to check yes. And then did you make any payments in 2022 that will require you to file forms 1099? So for most people, they're just simply receiving money. But if you have independent contractors up underneath you or sole proprietors underneath you that are doing work and you got to issue them a 1099 because you paid them more than $600, then you would check yes. Otherwise, you just check no. So what we're going to do is we start with the gross receipts or the sales. So we see that Memphis earned $62,816 driving for rideshare. And if he were doing something else where he had cost of goods sold, so let's say that you are a beautician or a hairstylist and you have like, chemicals or you have product that you're buying to do your client's work, then you would list the cost of goods sold associated with the sales. He doesn't have any, so we're just going to continue. Now, right here, you're going to list all of the expenses, and it says enter expenses for the business, and anything that basically you use for your business, 9 times out of 10 is going to be deducted. Now, if you are looking for all the different expenses that you can deduct, I recommend checking out IRS Publication 535, which is linked in the blog post, and it's also linked here in the description. You're going to deduct your advertising, car and truck expenses, which we'll go over. So if you are a rideshare driver, you're definitely going to have car and truck expenses. If you are using a vehicle in your business and you're self-employed, then you are potentially going to have car and truck. Deductible meals. So we can see Memphis had $143 in deductible meals. Now, to note, for 2021 and 2022 only, businesses can generally deduct the full cost of business-related food and beverages purchased from a restaurant. Otherwise, the limit is usually 50%. That's only for 2021 and 22 as a result of the pandemic. I've been doing this for forever, so I'm used to only deducting 50%. But needless to say, Memphis had $143 worth of meals, and really what this was just like water and mints and other little things that he had purchased for his passengers. And then you have other expenses. So when we go to the second page of the Schedule C, we can see that his other expenses were telephone. So he paid $18.72 that year to have a telephone because, he's got to have the app and everything in order to go ahead and do that. Now, real quick, we're going to hop back and we're going to look at this number right here, $16,718 worth of car and truck expenses. Now, the sheet that we're looking at on the screen is not really something that's going to be sent to the IRS. It's a worksheet that is used to help you determine your car and truck expenses. Now, there are 2 things that are essential to deducting car and truck expenses. The first is that you have to keep what is known as an IRS compliant mileage log. And then the second is you must track both personal and business miles. And this is because you have to determine the business use percentage of that vehicle. So if you drive a vehicle 10,000 miles in a year and use it 1,000 miles for business, that means that you are using that vehicle 10% for business. So we can see that for Memphis, he has a 1967 Ford Shelby GT 500, sweet car, and he put it in service 1/1/2022. And we can see that he drove 26,000 miles for business, and he drove another 6,549 doing other stuff. So this could be hanging out with Sway and Kip and all of his friends. Go watch the movie. But needless to say, he drove 33,000 miles that year, and that basically equates to 80% of the miles that he drove was related to business, okay? So once again, you're gonna need to track your business miles. Right here, you can see a screenshot from a mileage app, which is called Mile IQ. I am not recommending them, I'm not endorsing them, nor is this video sponsored by them, but they are an app that you can use to track your mileage. So what's pretty cool about the app is that it's GPS enabled. So when you get in, you click it and it will start your trip. And when you stop, it will stop the trip. It'll record everything. And then at the very end of the year, it'll print out this nice, pretty report that you can go ahead and you can give to your accountant, or you can use when you prepare your own tax return, listing out what miles were driven for business and personal and the appropriate percentage. So we'll go ahead here and we can look at the expenses that he had. So first thing is depreciation. The one thing to know about depreciation is basically that if you're using a vehicle for a business or any asset for business, the IRS is going to say that over the course of time, that asset is going to get worn down. So what they do is they give you an expense for the wear down or the breakdown of that asset. So in this particular case, Memphis has a car, he paid for it, so he gets to depreciate it, and his depreciation deduction was $3,100. We can see that he paid for garage rent, gas, insurance, licenses, probably like license plates, oil changes, repairs, tires, all the things that he had to do, or the expenses that he incurred in order to actually do rideshare. And we can also see he paid $389 in tolls and looks like he paid $79 in parking. So all these things, when you multiply them at the business percentage, total up to $13,478. Now, the thing to note with regards to auto expenses is that you can use one of 2 methods. You can either use the actual expense method or you can use the mileage method, which we're going to discuss next. So the actual expense method is you add up all your actual expenses, you take it times the business use percentage, and then you come to a number, which is what we see, $13,478. So one thing to note is that if a taxpayer uses the actual expense method in the first year, they must use the actual expense method for all the years that the vehicle is being used. However, if they use the standard mileage rate method, then they can actually switch to the actual method at a later point in time. What we see on the screen here is we see the standard mileage rate calculation for all those miles that Memphis drove. So we add up his miles and we get to 16,250. He gets to deduct his parking fees and tolls. So parking fees and tolls are independent of if you take the actual expense method or if you take the standard mileage rate. So if you take the standard mileage rate, you still get to deduct your parking and your tolls. So when we add up all those things, we see that his total standard mileage rate deduction is 16,718. Since 16,718 is greater than 13,478, which one do you think that Memphis is going to claim on his tax return? So if we jump back to the schedule, we can see that that's exactly what Memphis did. He took 16,718 of car and truck expenses, and we add up all of his expenses, they totaled up to 18,733. He's then got a tentative profit of 44,083. So this is the number that we saw on Schedule 1 and on the front of the 1040, and that's what he is going to basically pay taxes on. But we got a couple other steps that we got to go through before we get to that. Now we know that launching your business is going to take everything that you've got to make it a success. So to help you out, we created a free download for you, 10 accounting and tax tips for startups and small businesses. To grab your copy, just click the link in the description of this video, or you can just click right here. We'll then shoot that over to you as well as let you know when our new course, How to Set Your Business Up from a Legal and Tax Perspective, a step-by-step guide, is ready and available for purchase. Now, when you are self-employed, that means you are your own boss, okay? So when you work a job and you have a W-2, you actually pay a couple of different pieces of tax. You pay your federal income taxes, you have your state income taxes if you live in a state that has state taxes, and then there's two other taxes. There is Social Security and Medicare. And the way that it works is that you as the employee pay half of that, and then you as the employer or your employer, your boss, pays the other half. When you are your own boss and you're self-employed, you got to pay both sides of it. So on Schedule SE, which is self-employment tax, we take Memphis's profit, which is 44,083, and then we do a couple of different calculations, all right? But basically what ends up happening is we can see that he has self-employment tax of 6,229. Now, going back to this whole, employee, employer, what they do on the forms is they actually, quote unquote, give you a benefit for half of that. So they say, okay, you get to deduct half of what you, quote unquote, would have paid as an employee. And that's what this 3115 is. We'll see that number come up. But in actuality, as a tax preparer, that doesn't really equate to half. But that's a story for another day. Now, the last thing to note as it comes to self-employed taxes is that if you are self-employed, back in 2018 when they changed the tax law, they created this special deduction called the Qualified Business Income Deduction, or QBI. You can then potentially get a deduction equal to 20% of the net profit that you have for business. It gets way, way complicated, more advanced than what you need to know here, but just know that there's a potential QBI deduction for being self-employed, and Memphis looks like his is about 5604. But let's go see how the tax return turned out. So when we come back, we already know that his profit of $44,000 comes over. He has an adjustment from Schedule 1. So if we pop into Schedule 1 right quick, we can see that that is for his deductible part of the self-employment tax. So that's 3115. It's half of the self-employment tax coming from Schedule SE. All right. So he's got that deduction, and then he's either going to take the standard deduction for his filing status. They're all listed over here, or he's going to itemize. You basically take whichever one is greater. Memphis doesn't have any itemized deductions, so he's just going to take the standard for his filing status, which is single. And in 2022, that's $12,950. So he gets that deduction. He takes the qualified business income deduction, 20% of his net profit from business. So that is another $5,000 coming off. So those total up to $18,000, which gets him to $22,414. And this is his taxable income. So this is the number that he is going to pay income tax on. But the problem is that he's also self-employed. So he's also going to have to pay self-employment tax. So his income tax amount that he ends up paying is $2,486. But then the self-employed tax number that he has to pay is $6,229. Ouch. So he has a whopping $8,715 tax bill from driving rideshare. Now, if he made any 2022 estimated tax payments or he had any amounts applied from 2021 tax returns, those will be shown on line 26. So the main thing to know about estimated tax payments is how a self-employed individual pays their taxes as we go. So we work in a pay-as-you-go type of system. Normally, you work a job, they take taxes out every paycheck. Self-employed, every quarter, you're supposed to estimate what your profit from your business is, and then you're supposed to pay those estimated taxes over to the government. And they're paid in 4 different estimates. So that is due April the 15th, June 15th, September the 15th, and then January the 15th. of the following year. So you go ahead, you make all those payments, and then if you made those payments, you will report those right here on line 26. Well, since Memphis didn't make any estimated payments, he's just going to owe the full $8,715. And because he didn't make any estimated payments, he's got an estimated tax penalty of about $314, and that means his total is going to be $9,000. If you like this video and got some value from it, then please consider giving it a thumbs up, or you can say thanks by buying me a coffee. The link is in the description below, and the extra coins go towards helping us make future videos and pay for things like gear and props. Now, if you're filing your taxes for the first time and you want to see another live example tax return, just to confirm how everything works, then make sure you check out this video next. In that one, we did a tax return for Napoleon Dynamite. Hey, I warned you that I had an active imagination, folks. So until we meet again, remember to keep earning, keep learning, and just like that, this chat is adjourned.